Hello, everybody, and welcome to the midweek podcast, plus three forecasting here. My name is Ben Maldonado. As always, I'm here with my partner, Barry Hatarachi. And Barry, the hits keep coming.
They keep coming and we're loving it so far.
And when I say hits, I mean volatility. Holy moly, is it
No
great?
man. Yep. Haven't seen the VIX up here in a long time.
I
So
know, I just had this thought that when it goes back to like, VIX 20 or VIX 13, we're going to be bored as hell.
yeah, now we think like 20 is normal.
I
Right?
know, I know. Well, listen, we this is the midweek show is fast and furious, so let's dive right in on the S&P, give people some perspective on what's happened in 2 days, which normally is nothing, and in this thing, it's like a whole quarter in 2 days.
All right. So let's start with the S&P cash, and I'm going to hit through a couple of the um, charts that are important because we don't have a lot of time, and I'll also cover the GDX. There were a few requests for the DAX. The only thing is I don't have a chart worked up, but I will for the Friday show, and I'll pick it up there. And today, the second half, Ben's going to cover the stuff that we left out, the pictures, the charts that we left out accidentally. The voice was there on the last podcast, but not the charts. So we'll have the charts and the voice all
Get Barry, it
together.
wasn't a mistake. It was a radio broadcast.
Yeah, there you go. So it was radio. It worked out, I think, for the most part. All
Understood.
right. S&P, looking at the cash chart. Look, we left Friday with a couple of thoughts. One was how we're going to get a 45 degree, had a 45-degree move and a 90-degree move from the two highs, the original high in December, and then this sort of the false break high that we had in February. And they are lining up, between the 7th and the 10th, but 7th was the 45 degrees, solar degrees. So, and that's was Monday. And sure enough, we got a low on Monday and a higher high and a higher low today. So far, it looks like the low is in, but let's not, break out the champagne just yet. We'll see what happens. We need a few more days to sort of get this thing vetted properly. In the meantime, a couple of things to watch out for. I think for the cash, the 50% of the square here, I don't have the number added, but let's say it's 50.59. So, if we can sort of hold above 50.59, I think that's a good sign. That's a positive sign for the bulls. Means, we have some kind of a low at the bottom. Now, is this the low for this round? I don't think so because it just looks like unfinished business. We're a little bit further. I mean, we're below 135, we're below 144, and not quite to 180. My take is that no, we're not quite done. So, but we do have a low, worthy of a bounce. So whatever the bounce is, we'll have to play that.
And
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 also,
Barry, pointing out that you said on the first decline, the that we were short of the 90. So you said we're not done yet.
here, yeah.
And it's you and I were talking, this is the same setup that we're short of the 180, so we're
hmm
probably not done yet.
Yeah, probably not. And especially we're not even, it's between everything. So when it's like that, usually, not quite done, right?
Mhm.
Now, if we were able to stop here, it would have been a different story. But anyway, so for now, we're treating this as a low until that gets taken out. Um, in the meantime, like I said, if it bases the cash, if we can somehow get above and hold above this 50, 59, 50, 60 level, and I think that kind of opens up the way, maybe work ourselves back up to, well, 90 square would be 54.17. Obviously, clearing this 53.15 will, we'll have to we get the chance to close the gap and also get up into the 54, the 90-degree level. So that's kind of what's on deck for that. Dow also came down into a quarter square, pretty pretty good. But I wouldn't
Mhm.
expect big lows to sort of finish up on a quarter square. It just seems like there's a lot more structural support at the half over here at 35,596, and a lot more interesting as we get into the next two, 3 quarters, and with 33,000 being, really interesting. So I think again, the Dow has a little bit more to go, but quarter square is good enough for a bounce. So we're looking for that kind of a bounce. And on the Friday show, we talked about, the reasons for that. So we don't have to go through the entire thing. That said, we're also looking for, where this counter trend could end. If it goes now, thing with the bounce and the low is if the low goes, well, we'll have a lot more to go. Well, how much more do we have to go? I would say basis the cash. Let's just not forget that part of it. We can go to 46, let's say 4,700. So if the lows go, 4,700 should be pretty much the next support level. And if that goes, well, we can just keep going. There's no problem going lower. But that's sort of the reasonable level to watch. So here's that 45 coming off of the high in February. It looks good. Again, the 180 is down here. This is for the futures chart, continuous chart. It's 47.90, 47.19, 47.20 is where that comes in. So if we take out the lows, that's where we're going. Let's say 47.20. So you guys have that number. The corresponding number that we were looking at the 50% of the square would be 50.79.
So we get above that, then there's more to go in the
I think it
counter
pretty
trend.
much opens up going up into the 90, the 90-degree level, which is 54.40. But the other thing I wanted to sort of bring up is given the sort of the messy conditions here, these lows aren't always clean and they're not always sort of V-bottoms. So it's possible that we sort of mess around here, sort of crisscross, maybe 50.79 behaving a little bit like a mean reversion level.
Mm-hmm.
So watch out for that. We can get whipped around a little bit here. So, watch your positions, watch how you trade.
See today's
And
price action, for example.
yeah, absolutely. That's exactly how it could go.
Mm-hmm.
But the thing is, if we can start making higher lows, at least that'll give you the first indication of the directional stuff that we were talking about. All right. So speaking of today's price action, let's just look at the last couple of days. Not a whole lot to look at, but this 48.46 is on our 30-minute chart. It was support. We held that. That's where the lows came in, and eventually ran up into this 42.98, 42.88 level. We had this on the old charts. This 42.88 from the old level.
52.88.
I'm sorry, 52. Yeah, I'm thinking
Right.
positive here. 42.88, 52.88, and 52.98. These are from some old levels here also, but it also corresponds to the 325 high. They all kind of lined up, and you can see how we went right up into that, tapped it, and just reversed. And now we found support at 49.36. Yeah, Ben.
For those that don't believe in the power of false breaks, look at what the false break today did.
Beautiful, right? Perfect.
Mm-hmm.
Yeah, exactly. And when you get false breaks exactly at hard square numbers, I mean, those are the easy,
Yeah,
low
those are
hanging fruit,
nice. Yep.
like we call them.
Those are nice.
Mm-hmm. And today we were looking, if we get below, if we get stuck below that in 52.16, we're really looking for weaker conditions. And sure enough, we got that
Mm-hmm.
in a hurry. So that's what happened during the day. All right, this is the front month, June. Here we have 90 days from the December high. You guys can see how all this is lining up. And that's why I kept saying, well, it's somewhere between Monday and the 10th, because 10th ends up becoming 90 from that high.
Mm-hmm.
And we're still, 45, 48. So far as GAN numbers go, we're okay. We're still sort of clean. Now in the front month, 180 down ends up being 47.91. So you want to remember this level, 47.91. And it's possible, we can go on the 10th and square out here, perfectly balance out, and then mount some kind of a rally. But I think hitting these 45s and 90s, I just cannot. It'll be low probability to kind of blow right through and go on to a whole nother level, like let's say 45 or something, right? So I feel like whatever business, we're going to probably finish up within this time frame between the 7th and the 10th. And if the 7th low holds, great, just trade accordingly. And if we somehow run down and do a false break or sort of balance out closer to the 180-degree level in 90 calendar days or 90 trading days, it's perfect. I think timing's there, everything's there, and we can expect a decent bounce. I guess that's the whole point of that. And now you know why. So there's a little bit of a background there. All right, what else do we have? Really quick to touch on this weekly chart. This is the one we were, laboring over for a couple of months, about 4 months. So 5076 we talked about last Friday, right? Because
Hmm.
last week we stopped right on there. And the basic rule still applies, which is if we have a decent low at a key level, I mean, in this case, 180 up from the COVID lows, I'd say that's the important level. And we break through it, well, clearly there's more to go, right? And that's why we went to basically a quarter of the next square, which is also support. And we have structural support right here, basically the COVID highs, right? I mean, the COVID, not the COVID, 22 highs before you drop. And that's where we got that equal move also. I mean, years move of, look at this, Ben, years move of downward price action covered in, well, in a few weeks, right? Entire year's worth. So that was pretty impressive.
You know, you and
Mhm.
I were talking earlier this week. Remember, we said essentially the gains of 2024 have been wiped out in about a week.
Yeah. Yeah. Amazing.
Yep.
So, and well, it's great. It's amazing. And it's amazing. It's more amazing if you can catch a lot of that, but if you just sitting there holding the bag, then not so amazing, right?
Not so amazing.
And all right. So 5076 was the number. Now we're below it. So remember this basis of weekly 5076, drop it on your weekly charts. And if we can, once we can manage to get above that, then we can say, all right, we have something working to the upside. But weekly, not also, well, again, the quarter, this is okay. This is okay. Quarter square is okay for the market to stop there. But being that we also have structural support, we have some timing, we could get a decent bounce off of it. But I also feel like, it's not quite done. Even the correction that we got in 23, look, it went perfectly half a square.
Hmm.
So, and the run up full square, everything's very, very good on this chart, scale properly. So I feel like we're definitely not done, but it doesn't mean we can't catch a little bit of a bounce off those numbers. All right, just to sort of round it off, same rules apply. If we somehow cannot hold this, so the idea is we know we have some cycles expire. We're looking for some kind of a bounce into next week, at least. And if we can't get that, we take these lows out. Well, then we just can accelerate into next week, right? It doubles down on the one same direction.
It
So
looks
that's the
like the
thing to
bottom of
watch.
your circle will get hit.
We could definitely get hit, which I wouldn't have imagined, that
Right.
would happen. But now the thing is, we do have this huge circle to work through. We'll see what happens with that. All right, that's it. What I have for the S&P. I just wanted to hit. I know there was a couple of requests for the miners, and here I think really quick because it's the midweek show. We have a good square. We have a 72 by 144 coming up. These are weekly charts, by the way, coming up in June, July. So it's possible that we get a high. I mean, it'd be nice to finish off a high into that. Why am I saying that? Because we have a pretty good 36-week cycle going. We ran up from low to high here, and it wouldn't be strange to see a high to high running up into a 36. So I think there's a rhythm happening here, so that it could go on, and that could mark a pretty decent high for these. So let's watch for that and see what happens. Anything you want to add to that? The gold miners?
We follow those. I don't follow them so closely. They think they'll fly with the next move in gold.
Well, okay, that's the other part I wanted to say. So we had this 44 and 48 levels, and last few times we covered it. You guys can check the tapes on that. We talked about holding above the 50% line, which is 44 would be positive. And you can see on the correction, we held there and then running up, you can see the pullback held at 48. And after that, we were straight up, right? But we didn't quite get to the 72 level, which is 62. Again, now we're making higher highs and higher lows. Ideally, holding above 48 would be great. It just gives you more confidence. But coming, long as even if we break through that and hold somewhere in here, 45, anything above 44 is still very bullish. And the trend lines are in place and plenty of room to run. Not to say that 72 might be the final end. We could run up a 90. So I think that's still open, especially after this kind of a bottoming action, right? We're slowly. Look how slowly it's starting to pick up the pace. The
Hmm.
other thing I wanted to cover was, and we had some requests for the yen. Cool thing about the yen is every time we cover, everything sort of works out for some reason. I think last time we talked, it was we came up to this high, and we were running a 90 in time. Came down about a 48 in time, and the 90 price level is kind of what we bounced off in March before we dropped, and we dropped exactly 50% of the square. Now on this square from this high, early this year, we're down about 90 degrees here to where we are now, and we are 270 degrees from the July high. So we have timing right here and now. I would say this week, the 7th and 10th, I would wrap around this one also. So long as the yen is above, well, let's talk about the yen's about 145, which is the level that I posted the other day when somebody was asking about the yen. About 145, I think the pair we should be looking for it to move higher. And the same rules, if we somehow get through 145 and get stuck below, well, we have the 180 degrees to go up and check and definitely do a false break. That's 139.50. But because of the timing, it looks like we should hold here, and 145 is the level to watch and to confirm. And we talked about the timing, so you guys have that. The other thing was the Russell. We haven't looked at the Russell in a while. I think the last time we talked was when we pointed out this false break that happened at the high. And I think we were both giggling about this and saying, oh, look, Russell has this false break, and I wonder what kind of a break we're going to get. And sure, my goodness, after that first little, this part was a little bit boring, as if nobody wanted to get going. But boy, once it started rolling, it just moved. And this is what we were talking about, the fat pitch, right? Here's the high, came down, first pullback, there's the counter trend you're looking for, and then a nice ABCD down. So that's a third. We have ideally, theoretically, we have a fourth coming up, possibly messy, possibly clean. Either way, it doesn't look like we're going to be. After all of this, I don't think we're going to be done unless we go and check these lows. Kind of like we've been talking about crude.
Yeah, they're too tempting. Too
tempting. And the 90, you got to check the 90 before you do anything. And this 270 weeks comes up in May. Let's say end of May, early June.
Perfect,
right? That's pretty good. And of course now this 2036, 2005, this area becomes major resistance. That's going to be a bit of work to get back up in there.
Sure.
So it looks like, whatever bounce that we do get, most of the work is the downside. I think I have one more. I just want to show you guys the Hang Seng and Crude really quick. Take 2 minutes. And here I'm not showing off. I just want to show you the power of the squares. There's 22.
Talk about 10. Giving it up.
Well, classic, eh? Look, 22, 7, 10 is the level we were watching, saying, hey, it's going to be weak below. Holy moly. I didn't expect it. Then where does it go? The highs are right
to the next level.
Right to the next level. And the highs just couldn't get above that 2380, which we were watching back here, back in the day. Remember, we gapped open, came up, tested this, and took off. Now we're under that. So clearly, that false break was the thing.
Massive.
That was massive, amazing. And at the time I said, look, it's a false break, but if we can hold above the, this 144, we're still in good shape. Then we start to slip.
And then you get to kiss goodbye.
Kiss goodbye right there. Absolutely. So I just want to talk about that. And then the only other one was Crude. Just to say, because a friend called today and he was asking, well, you think the low's in for Crude? I said, well, low might not be in, or it might be in, but so that made me think about, well, what's my take on this? My take is I was looking for a washout, right?
Right.
It wasn't really about getting the low to the tick, which we will. But for now, it was really about, are we going to get this flush? Because that'll open up the pathway to some kind of a blistering move up at some point. But we want to finish up this leg. So that was it. I think my point here is I'm not really concerned about the low right now, because I think it could be a little messy, kind of a bottom, like oil. Look how it puts in lows, right? It's always some kind of a big drama.
Right.
So it's never never that clean. So we'll get the low as it shows up. But for now, to say, it's really about the, I'm happy we got the break, and which tells us that we can expect a much nicer, better
movement.
movement in
Hmm.
the very short future. Oh, the one other one, and that's the
Hey, wait, the
bonds.
only, well,
Yeah,
first on crude, the question I have for you is the guy who called your perfect contrarian indicator, or is it a different guy?
it's a different guy.
Okay, all right.
Yeah, yeah. I was gonna say if it was him, then we should be buying calls now.
By hand over fist. Let's get those calls.
Yeah, but we're gonna be watching this. I mean, we'll cover more on crude on Friday, but I just
Right.
wanted to point that out. And the other one from Friday to today, boy, how fast things can change. Um, we talked about the 50%. We basically took out the 19, 19 and a half, and I said, well, this 22 level is really the level of resistance, 50% of the square. Let's see if we can get above that, because the next one is, still a couple of points away, and that is like real resistance, right? Why? Because it's a half a square, and the run up was 45-degree run up from this low to this high, and this is how the markets move. So you'd expect it to halt there, and sure enough, Monday ran up, false
Wow.
break, big outside, and boom, boom, and so much for the birds on the wire part, right? We just took everything out,
Now it looks like
and
you're doing some sort of nasty expanding triangle there.
it could be, yeah. Well, I mean, right here, I
And
mean,
then going up too off that high to high.
it could certainly doing that. The other
Yep.
thing is, I mean, this was such a false move, This
Yep.
part really looked a little bit suspicious to me. I think 1916 was the level, but yeah, let's pump it up. And then to Monday to pull this off. Anyway, amazing classic. So, but again, I just wanted to bring this up because of the levels we talk about. The
Sure.
reason we go stick with these things is because they actually work when it counts. And imagine, Monday these highs are getting taken out and somebody's going long, right? And
Oof.
I saw all this news about rates are below 4 now, everything's cool. Next thing you know, poof, rug pull,
Wow.
right? I mean, it was in the
Amazing.
news, right? I remember
Amazing.
seeing it over the weekend.
Yep.
That's it. That was my fast as I could go. Let me put it back to you, and
Okay.
I'm gonna try to get the video and the audio this time.
No radio.
And
My radio career's over.
yeah, we'll have to do a separate one for that. And guys, thanks for all the help and support and the likes and the comments. You guys are engaged. It's very cool. And if you guys want us to cover anything else, let us know.
Yeah.
Anything,
And we got
anything.
record views this week too.
Yeah, yeah. And so
So
thanks for
thank you.
sharing and telling
Yeah,
people
thank
and
you.
all the things. If you like our work, please remember to like and subscribe. What else? Like, subscribe, and the alert. Thanks. Put this back to Ben. All right, Ben, we were joking about 17,000 on Friday, thinking that, yeah, we got below the 50% level. We might get down to 17. Well, hell, we almost got down to the 16,300 level,
I know it's crazy, right?
right?
But I mean, the volatility has been massive, but look at how well the squares do, right? We came
Yeah,
down,
yeah.
caught the half square, pushed up, couldn't make it, failed here,
Right there. Yep.
sliced right through these, and then down to this one, down to 17. I mean, clearly we're looking at a market that's weak, right? What we're hoping to see is some sort of bounce or, you know, a cooling off here that allows us to then assess, okay, what's the next move? Where's
Hmm.
the next leg? Because we've got one, two, let's say this is probably the second big leg, so there could be one more big leg coming. What I would also look at from the high, because remember this made its high in December. There was no, it was a lower high in February. If we go 90 trading days, it puts us out to April 21st.
Hmm.
So that's a potential time for a low.
Hmm.
We got to watch that and see. This run has done almost a 90, right? We started
Hmm.
here. 90 would be in early. Well, actually, it looks like it would be close to that. 45 would be close to that day. So it was probably high to high 45, and then high to low could be 45.
Right.
So we got to watch around this April 21st date because to me, that looks like a very interesting spot.
Hmm.
The keys on the upside, if we are going to rally, 17,750, call it. That's your
Right.
half square. That's the first spot we got to get over. We clear that, then we're talking about, 18,750. Clear that, and then you're talking about 19,000. And that's when you're going
Mhm.
to not only run into half square resistance, but really pretty big structural resistance here. So is it possible we could bounce that high? Yeah, likely, not likely. But let's see. Let's see what the character of the
That's
bounce
where
is.
that's where when all the FOMO is going to kick in, right about 19,000.
Yeah. And then rolling over right there would be fantastic. So it all started when we started coming down, right? Look, here was the first battle, right? Well, here was actually the first battle, 3 or 4 days right here at the 21, lost that. Then we started battling here, lost that, came back, couldn't even get up to it. Then the battle was at 19, and then we just started slicing. So that's how the squares work. We got timing coming up, so we be wary of that. And watch the levels here. 17,000 is your on the downside. If we get below 17,000, then we're going again, and we're most likely taking out those lows. If we get above 17,748, then we're heading up, to probably 18,746.
Mhm.
But there's nothing to say that's very bullish about this chart. Anything to add on NQs?
No, no, good coverage. We're good.
Okay. Let's go to Bitcoin because we're going to keep it shorter. I'm not going to do the weekly, monthly unless they show anything
Hmm.
dramatic. So Bitcoin just missed our box, didn't quite make it yet. Um, doesn't mean it's out of the woods because if we can't get above 17,465, the pressure is down to the full square here. So I got to believe we're going to come down and at least test this. And as most markets do, especially the speculative markets, they're going to push a little further. So I
Hmm.
wouldn't be surprised to see us, at 71, 72,000. But remember, we put this triangle in. Look at when we broke out of that triangle, how fast it went.
Yep.
So that's Bitcoin. Anything to add here on Bitcoin?
Well, I didn't get to your target yet, so
Not quite.
or your yellow line there.
Yeah, unfinished business.
Yeah, finished business. There you go.
So we'll see.
Absolutely.
I thought
Hmm.
I read something today where in MicroStrategy's latest like SEC filings, they were talking
Hmm.
about one of the risks was they may have to start liquidating Bitcoin
All
to
right.
meet obligations. That could be the flush.
Yeah, yeah.
So we'll see.
Hmm.
So the rest of what I'm going to do is we're going to review the couple charts that you didn't get to see on Friday. Let's start with coffee. And this is a beautiful tutorial, right? We were here on
Hmm.
Friday, right? We
Yep.
stopped, we broke out of the triangle and we were right there. I said, Barry, it's time to go on
Hmm.
coffee. It found support at 366, but the triangle broke.
And
So the
whoosh.
momentum we saw here, was the throw you off by, triangulating and then boom, here we go. So not only did we lose 366 so far this week in 2 days, we lost this one by one
Right.
off that low. So it sure looks like coffee's heading to 321. And there's decent support in here, as you can see that because we on the way up, we spent, a month and a half in here.
Hmm.
So if you're short, it's probably a good place to take some profit if we get down in there. But that's the setup, right? This is, we had a square out, you had the pullback, you get the lower highs, and then you see, the momentum begins to roll over. Let's check out the weekly because I think the weekly is informative too. So this is that triangle mess that you see. And what we said, okay, so on weekly basis, 358, which was not far from the 366. Well, we sliced right through it. So next support on the weekly is 331. And the beautiful thing about this, Barry, is this market looked so bullish right here, but that's where we had the squares, that's where we had false breaks, that's where we lost the level. And that's
Hmm.
when you start and you get the lower high, that's when you can start beginning to look in the opposite direction while everybody else is still saying, "Oh, this market's bullish. It's going to keep going." And that's the clues. That's why we use the squares. That's why we look for the cycles,
Hmm.
the time cycles coming in, because it gives us a chance to attack these things early without a lot of risk. And so that's coffee. The last one we want to look at, because we're running out of time. This is the midweek show, so we got to go fast.
Hmm.
We had a request to make sure we showed the crude circle. And I think this is a beautiful example of how these circles can work for you.
Hmm.
When the price starts catching this edge and can't escape it, this is when you get a
Getting hammered.
velocity. Yeah, yeah, exactly. Momentum starts kicking in, velocity comes in. And what we were
Hmm.
saying as we were coming down, the key here is if we got stuck under this full square. Well, look what happened so far the last 2 months. That's the March
Hmm.
bar, full bar
Right.
got stuck under, and there's your April bar. And now you've got the pressure of being stuck under the full square and the pressure of the edge of this circle that's helping to force price down. Now, do we think it's going to 41? I can't say that. Right. I think Barry's scenario of, taking out all these lows and then potentially reversing is there. But the good news is on a monthly basis, we'll know because when it breaks out of this circle, when you lose these edges of the circles, you get a fast move in the opposite direction. Here's an
Hmm.
example. See how it was running up the square? I mean, running up the circle,
Right.
got outside of the circle, boom. It happens a lot
Hmm.
with these circles. So that's what we want to look at for on crude. Either we keep going down nicely and are contained by the circle and we get the speed move, or we break out of this circle and then we can get a fast move in
Hmm.
the opposite direction. Anything else you want to add on crude?
No, we're good. That's a great chart.
Yeah, so that I mean that's it. That's it for what I have. I think as Barry said, we have a wonderful trading environment because we got lots of volatility. If you use your levels and use them to assess the probabilities of where things are going to go, it really takes the stress out of all the volatility because you're just looking at a level, right? And if
Right.
you miss the trade and you miss a setup off a level, it's okay. It'll be back, right? We're
Hmm.
seeing crazy volatility. You don't have to chase because chasing in a normal market will get you in trouble. In this market, it'll get you killed. So until Friday, that's it for us. We hope to have as good a day the next 3 days as we've had the last two. Wishing you all the best in trading. Thanks again. Like I said, this past week's video, we had the most views, and we really appreciate your support. Your continued support and helping us grow the channel is greatly appreciated. And we'll talk to you on Friday.
All right. Thanks, Ben. Great job. I'm glad we caught the whole slideshow this
Yeah.
time.
Yeah.
And we'll see you Friday. Take
We'll
care,
see
everybody.
everybody Friday. Take
All
care.
right. Bye-bye.
Bye.